Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. A lot to look at. No surprise, the discussion is going to be about what's been happening with JBS. We know that's all been fixed, but as you can see, Brad Kooima is joining us. He's with Kooima and Varlick out of Sioux Center, Iowa. The question really comes down to, why did the hogs react to JBS and the cyber attack like we saw the cattle react? Are we seeing an oversupply, that is, of cattle to the south? Add to it the cash market. We continue to limp along with that. Are we seeing customers? They still got the cash. Are they really wanting to buy some of that meat out there? Lots to talk about. So, Brad, I think we do have to start out with JBS. The cyber attack from a cattle perspective, what did you think this week?
Well, the first thing I thought is, you've got to be kidding me. What next, right? I mean, I say that here, sort of facetiously, but not really, that every day you go home from work, there's something that could happen that you have no control of that would create a market to go sharply lower. And that was one of them. Now, thankfully, at least this was short-lived. Basically affected roughly a day and a half of slaughter. Happened over the weekend, so then with a Monday holiday, Tuesday was the first impactful day here. JBS accounts for about 25,000 cattle per day in there. Well, they have 9 different facilities, and it was clear. I mean, on Tuesday, a week ago Tuesday, the slaughter was 120. This Tuesday, it was 95. So it was, right on the dot. The 25,000 cattle missing obviously were from the JBS plants. Then on Wednesday, as they started to slowly come back online after having resolved their problem one way or the other, we saw the slaughter come back up to 105 instead of the 120. So we lost about, 35,000, I guess, in this week's slaughter to what we should have gotten. I'm hopeful that we'll make up a bit of that tomorrow with a increased Saturday kill. But it does add a little bit to a problem that we've already had, Susan, and that is, it feels like we aren't really selling as many cattle as we need to. At least not as what you would expect with high price feed, where you would expect you'd see extra selling. You would expect to see weights come off. Now this week the weights did on week come down 6 pounds. But for a numbers nerd like me, and I'd rather be optimistic, as you know, but it looks to me like we've certainly backed up some cattle the last 6 to 8 weeks, Susan.
So we normally don't talk about hogs during the cattle call, but why did the hogs not react to JBS? Like you said before we started this, they kill hogs as well.
Correct. 5 plants, 80, 90,000 hogs a day. Big deal. Close to 18 to 20% of the overall U.S. slaughter daily. So you ask a great question. I wished I had an equally great answer. I thought it was real telling. We sat here and I said, well, clearly it doesn't matter to the hogs. There's something a little more powerful going on in the hog market. There is some speculative trading that goes on between those two contracts, where you see cattle hog spreads and vice versa. All of that's possible. But I really think, is the best answer I can give you is that there's a number of these cash contract or hog formula contracts where the cash is tied to, at least in part, to the pork product value. So as slaughter goes down, box beef goes up, pork product goes up, and so that, I think, helped support more than anything else, the cash hog thing, and support the futures as well.
So as we look at this cash market, the limp that we saw this week, what's behind it? Is it because we're coming off a holiday? Are we just not seeing the demand that's out there? Why such lower numbers? Well,
it's not the demand. Demand is pick your favorite superlative. It's outstanding. It 124, I should keep track. What is this, 5th or 6th week in a row? We've come to call them different things. Sympathy bid, token bids, guilt bids, you call them what you will. All of the majors are participating. I personally sold cattle for 120 to 2 different majors on a very limited basis. Mind you, one of them, there was a pen of 147 cattle, and they said they could bid $1.20, but only on 120 head. Seriously? So what's happening is these packers go out and they give all their buyers just this small little order, trying to kind of keep everybody a little bit appeased. The packers just got so much leverage right now, Susan, that our negotiating power is absolutely zero. Honestly, these packers could buy cattle for $1.10 if that's what they felt like, or they could pay $1.35 like they are in Canada if they felt like it, right? I mean, they're making $1,200, $1,400 a head. So the frustration continues. I don't see anything changing, frankly. I think if I had to guess cash next week, it'd be 120 again on a limited basis. The South is not very current. Texas and Kansas have a lot of cattle. Thankfully, we're kind of in between crops yet. The calves they're just about there, but not in big quantity. What scares me a little bit is that we know they're right around the corner. As you move toward June and into July, that the supply of cattle in the north picks up.
There's been so much talk about dryness in the Montana, part of the Dakotas. Having said that, when do you think we might start seeing the influx of some of these cattle coming to market, and older cattle at that, just because there's not the feed stuff there?
I was surely hoping we wouldn't have to go through another one of these liquidation phases, but it's the timing is now. In fact, talking to friends of mine in North Dakota, you're starting to see the cow-calf pairs, that's your last resort, right? When you start to sell the pairs, the first thing would be to probably dump the oldest of your cows and then give up on your replacement heifers, the idea that you had. But I mean, when you start selling out your factory or cow-calf pair, the west of the Missouri River in North Dakota is desperately dry, as well as the northern half of South Dakota in that same area, and then that whole eastern rim of Montana. Now there's some areas that have picked up some moisture, fortunately for them, but the next thing you're going to see is unfortunately another round of this female liquidation. That's part of the slaughter level too, Susan. That's been disappointing. Even when we kill the big 660, a lot of that, there's probably 35 or 40 or 45,000 of that's non-fit because of the extra stuff that's going on in there. So I wished I had a little more optimistic tone here I could throw at you, but it just feels like I'm kind of downer Debbie here today. But maybe the market kind of sits here at 120, which isn't enough either. We all know that.
All right. Well, we can always hope for better things come next week, right?
Absolutely. Again, Brad is known to be wrong, so let's hope he is.
All right. Sounds good. Thanks so much, Brad. Just a reminder, commodity futures and options involve substantial risk of loss and are not suitable to all investors. That's this week's Cattle Call. I'm Susan Littlefield.